The US stock market opened today with unusual intensity, and if you're watching closely, this could be one of those sessions that quietly sets up the next big move, because right from the opening bell, investors reacted sharply to fresh economic signals, shifting bond yields, and rising expectations around what the Federal Reserve might do next, creating a mix of excitement and uncertainty across the S&P 500, Nasdaq, and Dow Jones. Early price action shows that markets are struggling to choose a clear direction, which usually means big players are positioning rather than panicking, and this is exactly the kind of environment where smart money starts moving before headlines catch up. Inflation data, even when it comes in slightly above or below expectations, is now having an outsized impact because traders are trying to price in whether rate cuts are coming sooner or later, and bond yields are acting like a warning signal, quietly telling us how institutional investors are thinking. At the same time, tech and AI stocks remain the engine of this market, with names like Nvidia, Apple, Microsoft, and Google heavily influencing overall sentiment, and when these stocks hesitate or spike, the entire market feels it instantly. What's interesting today is that while tech is still leading, there are early signs of rotation into energy, defensives, and value stocks, which often happens when investors start balancing risk instead of chasing momentum blindly. Volatility remains elevated, and that's not necessarily a bad thing, because volatility creates opportunity for disciplined traders and long-term investors who understand risk, rather than reacting emotionally to every red or green candle. Earnings expectations are also extremely high right now, which means even good results can cause sell-offs if guidance doesn't impress, and that's why the market feels nervous despite strong headlines. This is where many retail investors get confused, but the key lesson today is that markets don't move on news alone, they move on expectations versus reality. If the Fed sounds even slightly more cautious, or inflation surprises in either direction, momentum can shift fast, turning today's hesitation into either a breakout or a sharp pullback. Long-term investors are watching closely for quality stocks pulling back into strong support zones, while short-term traders are focused on market open levels, volume spikes, and sector leadership. So the real question today isn't just whether the market goes up or down, but whether this opening volatility is setting the stage for the next trend, because historically, markets often give subtle clues before making their biggest moves. If you understand these signals, you stop reacting and start anticipating, and that's the difference between guessing and investing with confidence. So stay focused, stay patient, and watch how today's session develops, because this market open could matter more than it looks right now.